Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, where you draw the RSI from this peak, and this peak, and also when you do the same for the MACD, bearish divergence came in. And from that, the market rejected the top side level, which was around 67, 60, 65, seen as resistance, and now looking back towards its trend line, which is somewhere around the region of 67 cents. I do feel that the market is a little bit overextended since this rally from around 64 cents. So as we can see from the trend line, if we do see a break, we could get a pullback to 66, 65. Reassess from there, just in case we see profit taking come back into play. The initial move came from the CPI released yesterday as November inflation cooled, but remained above the RBA's 2 to 3% target range, with the headline CPI flat on the month at 0% and slowing to 3.4% year on year from 3.8%, while the policy relevant trimmed mean moderated only marginally to 3.2%, reinforcing the view that underlying price pressure remains sticky and policy will stay restrictive. US data released also offered little fresh direction, with the ADP jobs rising by a modest 41,000 the ISM services PMI surprisingly higher at 54.4, and the JOLTS opening job that is falling to 7.15 million. This has left the Australian dollar a little bit on the conservative side, but as I say, bears are back in play. Profit taking seems to be emerging. Let's see how it plays towards 67.05 and possibly down to 66.65 and see if it bounces with a cap around 67.60, 65. As we look upon the euro, we can see the market still remains somewhat negative as it pushes lower and closer towards the bottom side of its range. I believe around 116, 10.15 to around 116.5. Let's see if we can get a bounce, and if so, rally on back to 117 to 118, 2040 as the broader call. We are extremely oversold, so it's time for a correction soon. Dollar yen, well, it's starting to play games again as it now looks back towards that top side of the range. We can see that every time we get closer towards the region of 157 to 157.5, we get a bull trap, and history will repeat itself and no doubt get another bull trap. Nevertheless, the MACD is flat to support that bull trap, and also the RSI is directionless. So let's see if we get a rejection and look back towards the lows of 156, 154, or even down to 153.80 to 154. Wrapping up with sterling and commodities, we can see sterling was a little bit weaker, but there could be a little bit of a bias to the upside turning or coming soon. Anywhere from the region of the lows of 134 could see a bounce and look back towards 135 to 135.5. Commodities even saw a bit of profit taking come back into play here as the market looks towards its trend line. Quite a way down, that is, around 4,350.80 area, and there's still a little bit more room to the downside as the technicals are buckling. Nevertheless, bargain hunters have always been a key point to see a return, and let's see if it happens so again. Oil was also a little bit weaker, as we can see. The market is looking back to the bottom side of this range, around $55 a barrel. Let's see if the bargain hunters return and bounces and look back towards $59 a barrel. That's a wrap. Thank you for joining me. As always, look out for the interest report. I hope you enjoy the great start to the day.